Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the euro currency. So fundamental background currently on the market stands relatively quiet. So because events that we've got on this week we have discussed in the weekly report. So there are some interesting issues that has happened. So maybe on the statistics on political life we do not have a lot of breakouts, but there are some technical issues stands interesting. This is swap situation with the forex swaps. So that could trigger the demand for the United States dollar close to the end of the year, and that could become the additional technical factor that could support the United States dollar. So, but in general, in common, market stands in some short-term equilibrium that led market to be driven by its own factors and with no significant impact from the outside. And you can see this in a particular price action on the charts. So when the market is driven by its own factors, the technical tools usually works very nice, and that is confirmed by our analysis that we have traded on last week. So the setup, the targets that we have prepared worked nice, and market actually on the daily chart, as you can see, has hit the minimal target that we have suggested. So approximately the 1060 area has been touched, and that is the 30% level of this downward action. So in fact, the minimum target of the regardless triple to buy action is completed. In the current situation on the market, guys, we should not forget that on the weekly chart we have the bearish setup, because this drop mostly has happened just within the 1 week, and we have the big reversal candle on the weekly chart, and that puts the shadow on the lower time frames as well, on the daily and on the intraday charts. And despite that this rally looks really nice on the market, we should be extra careful with the resistance levels that we have here, and we have the additional responsibility of the money management to manage our positions. So if you still have the long position, you keep it since the last week, think about the stop management, tidy your stops, and think at least about the taking of the 50% profit. So if you do not want to close it totally and try to re-enter later, it is easier for you to just keep position, grab the half of the profit at least, because odds really are not small that market could turn down here. That's what about the long position. At the same time, if you take a look at the recent drop, you will see that actually it could carry the features of the bread and butter trade, because we have 7 bars to the downside. On the 4 time frame chart, it looks even better. We have the close above the 3x3, and market hits the 30% level. So that is potential setup for the bread and butter sell. It means two things. First of all, market could show at least a 618 retracement here, but potentially, if you take into consideration the weekly situation that we have reversal session, this so-called bread and butter setup could be the starting point of the downward continuation as well. So that's the risk which bulls will meet on the next week. So that's important. For the bears, conversely, this is the scenario that you could consider if you trade on the intraday charts and scalp trader, you search chance to go short, because at least mine reaction probably from the major resistance should happen. So on the 4-hour time frame chart, what we have, that's the level that I'm talking about. But what's more interesting on the hourly chart, take a look. On the hourly chart, we have perfect ABCD patterns completed. Here, guys, by the way, just don't forget to mention, if you will build here another level from this top, for example, or from that top, right to the bottom, you will get here also the 618 resistance. So that will be the conference resistance on the 4-hour time frame chart. So market stands in the intraday conference resistance, and also this is agreement, because market has completed the ABCD level. So that's good potential area in general to think about taking scalp short position. If you trade on the long side, that's the reason why I'm calling you to think about managing your position, because that's really suggests odds in favor of possible retracement. It could be of the different depth, but at least market probably could reach the confidence support. So what we intend to do on the next week. Here we need to clarity from the market whether the bullish sentiment still stands on the market and market will continue upward action, because in general, as you can see, overall rally on Friday and Thursday was really nice, and this upward acceleration as soon as our 35 pattern has been completed also stands perfect. So in general, you can see that not bad pace of all in general upward action. So and currently we actually do not have any reasons by taking a look at the hourly chart that the market is just reversing down, except the situation that we have on the weekly. That brings the risk here. And here we need to keep an eye on the level. So bulls have to keep an eye on the major supports. There are two of them. The first is the confidence, 1030. Second is 1014 is the major 618 support. So potentially brand body setup suggests that market could drop as far as to the 618 support. And in general, if you'll take a look at this action, you will see that it's the first upward reversal swing, after the long downward action. And deep retracement here is absolutely normal, natural feature that could happen. But the breaking of all these levels, especially confidence and 618 to the downside, will be not a good sign for the bulls. It could mean that weekly situation starts to impact on the market and trigger downward action. So I am not excluding the situation where the brand body potential setup for retracement later will shift in the setup of the downward continuation. This could happen, and we should be ready for that. That's why do not be hurry up with the taking the long position as soon as market will hit some levels. Just keep watching what will happen. So market have to hold about these levels and prove that the bullish sentiment still stands here and it's ready for upward continuation. If you still intend to take the position, try to take it on the strong levels. This is two levels, here and here, and with some bullish patterns on your back. So if market will reach this level, drop your time frame to the 5-minute chart or maybe 15-minute chart, watch for bullish reversal patterns and use them for taking the position. Also avoid any long entry if you will get fast drops. So for example, it will be just not one single nasty black candle right to the confidence support. This will be clear answer that we should not take any long position here. So that's approximately what we intend to do on the next week.